Good morning. My name's Neil Harris. I'm the Global Chief Commercial Officer of GPS. My principal responsibilities there being our customer success, partner ecosystem, and our global expansion across the world. I'm also the chairman. I have the privilege and pleasure to be the chairman of the Inclusion Foundation, by which I've actually met and work alongside Mr. Chris Pond, who's also joining us today on the discussion around financial inclusion. And let's stop talking about it. Let's get it done. So, Chris, over to you. Would love to hear your introduction and what you want to get out of this session.
Well, I think this session should flag up both the challenges we face with the current crisis and the opportunities that it presents us with, because the UK entered the pandemic with half the population in a very fragile situation financially. We'd got I've got the actual figures here. 12 million people were struggling even before COVID-19 hit, and another 13 million who was squeezed. Now, in those circumstances, of course, when something like the pandemic hits and people suddenly find that they no longer have a means of either receiving an income or spending that income, it is bound to create real challenges. And financial exclusion has meant that we've got over 1 million people who don't even have a bank account. We've got something like a third of the population who don't have access to basic insurance, or people and millions of people who before the pandemic hit would not last a month with any savings that they had available. Now, in those circumstances, not only those individuals very vulnerable, but so is the whole economy. Our economy is based on spending. It's a consumer-based economy. And suddenly, that economy has been put into a lockdown, a suspended animation. So we have to think then, those are the challenges. What are the opportunities we have to address those challenges? And I think, frankly, that innovation, fintech, is one of the ways in which we can recognize that the pandemic has changed everything. And we have to start anew. A huge proportion of the population have said they don't want to go back to things as they were. Let's use that as an opportunity and think of ways in which we can do things better in future, using innovation, using fintech, using a new design for financial services, which really addresses that exclusion.
Absolutely. And one of the things to pick up, there's been a huge shift towards the digital payment ecosystem effectively within the COVID environment, of course. So, quick question for you, Chris. When was the last time you actually used cash as a tool?
I'm slightly embarrassed to say, Neil, it was when I realized I was on my way to the supermarket and I didn't have a coin for the shopping trolley. So I rather naively went to the nearest cash machine I could find and took out a £5, because frankly, most of the time I'm not using cash anyway. I took a £5. I then went to Starbucks to try to buy a coffee to get my change of £1. And of course, Starbucks, like all other retailers or most other retailers, are not taking cash at the moment. Quite rightly, why should they have the risk for that? So I ended up without being able to get my shopping trolley and just carried around 2 rather heavy baskets as a result. But I think for so many of us, we've assumed now that the cashless economy, is here to stay. But for many people, cash is important because it's for them a way of budgeting, it's a way of staying in control. And I have to say, it's partly because there are still large numbers of people who don't trust financial institutions and who would much rather take the cash out and use it to budget. They have control over it. They know what they're doing with it. So I think the big challenge is recognizing that, cash has fallen through the floor. The use of cash has fallen through the floor during the pandemic. Let's find digital ways of giving people back that control and the budgeting tools that they need in a digital way for those who do have digital access and digital skills. But we've got to recognize there's a large proportion of the population have neither of those things.
Absolutely. I think the last survey, there was over 1.5 million people entirely dependent on cash still. So obviously those people being desperately hit in the COVID environment. I mean, I personally, one guilty pleasure is the chip shop, and they historically always take cash, right? So dutifully took out the cash, queued up, got to the desk, and they're not accepting cash anymore. So that was a bit of a problem. Luckily, had my actually had my iPhone with me, so paid with my Apple Wallet. But then, actually, interestingly, the next time we went, which was a couple of weeks later, they weren't accepting cards anymore. So that was So that there are these shifts we're seeing within the retailer environment where you just don't know, are you going to be paying cash or are you going to be, and it's that uncertainty as well, which does create concern and doubt within the community. We're very privileged in that I have both access to cash and access to multiple digital accounts, but not everybody's the same, of course.
And I think, Neil, 12 million people who don't have basic digital skills, and still a large number of households who don't have access to the internet, either because they're in low connectivity areas or because they can't afford the internet at home. And the pandemic again has really flushed out the extent to which those people are disadvantaged.
Absolutely. What we are seeing, though, is that actually the fintech response to this environment has been quite spectacular. We, as part of the EPA Project Inclusion, in partnership with the Inclusion Foundation, we carried out a survey recently, and I'd like to just kind of highlight some of the benefits and the output of that survey, because we all know and recognize that actually digital accounting does have the capacity, does have the controls, it has the mechanism, but also more importantly, it has the consumer protection. If you lose your fiver, it's lost. The benefit of and we've seen this, not only with holiday bookings and other transactions that have been done from an e-commerce perspective. You've got that chargeback capability, the protection, the security, the controls. They are there, and they do exist. But it is about education as well. It is about making sure that all of our citizens, including those who are today excluded, are led on that journey towards that cashless society, which, as you say, Chris, we're clearly on. Whether or not we're actually articulating it clearly with a defined view is another matter. And actually, I think in some ways that would really help the communities actually gear up if there was actually a finite date. Look, guys, yes, we are going to disband cash. We are going to move away from it, and it's going to be we're looking at 2028, and that's the date that we're going to try and hit. And in that way, the whole community can get behind it, whether that be, the fintech community, other social groups to support charities, organizations such as the Inclusion Foundation, actually help support people in that journey to ensure that we don't leave anybody behind in that process. But in terms of, fintech and the way that they've pivoted, it's quite exceptional, really. We were stunned ourselves. We've seen it from an industry perspective, in specific projects and organizations launching very specific initiatives to help people within this environment. But actually the numbers are far greater than even we imagine them to be. So 73% of fintechs that were surveyed have actually increased their focus on delivering financially inclusive products and services. 33% of those have actually developed new partnerships in order to deliver those services. So sometimes it does take them further outside of where they can reach, but they've done so through partnership. And only 1 in 3 of those organizations actually saw this activity as like a CSR, as some kind of social responsibility. There is social responsibility, absolutely, but it has to be viable. It has to be sustainable. And so with 2 in 3 organizations actually recognizing this isn't just CSR, this is actually a real business and commercial value to my business, to my consumers, to my users. And that means it is sustainable, which is absolutely key. Sustainability of product is something that within the fintech community, especially with it being highly driven by typically through external investment as well, to launch at least these programs. Sustainability is absolutely key in how they're going to make money in the future, and how they're going to continue that service. But one of the things that we were also astonished by is that actually 48% of those fintechs said that they can't do it alone. It's not just about technology. It is actually about the environment in which the consumer sits, whether that be small business or an individual citizen of the UK. So they can't do it alone. So they definitely need the support of government, of the regulators, to actually make this happen. And of course, we've already touched on digital inclusion. And there is a real marriage between digital inclusion and financial inclusion, right?
Absolutely. I mean, if you are not digitally included, then you are going to be left outside access to financial services, and therefore you are going to be paying a premium for accessing not only financial services, but retailing, etc. And some of the work that's been done on the poverty premium shows that it costs on average, for those who are excluded, an extra 10 quid a week to get the same goods and services you or I expect to get for a good price. So if you can buy stuff online, you're going to be paying less for it than if you go into a shop. Well, at the moment, the opportunities for going into shops are much less, and to buy online is much greater. You can't do it if you're digitally excluded.
Absolutely. And I mean, I'm a victim of digital exclusion myself, Chris. My mobile device, it's brilliant when I've got the technology in my hand. I can do anything. I could literally launch a spacecraft with this thing, but I can't get a network signal at my house. And obviously being in a lockdown environment is an absolute nightmare. In order to buy something online through e-commerce, now thanks to the securities of 3D Secure, I get a text message from my bank to say, right, are you sure it's you, Neil? Yes, it is. The challenge is, what they don't realize, I have to run about half a mile up the road in order to get a signal to receive the text message and then run back. So digital inclusion is absolutely key, and it does. It's a well-known and covered fact. In fact, Ofcom themselves have recognised this. The challenge being, though, that Ofcom have set these targets for the telco operators to ensure good quality voice and data coverage, but of 88% of the United Kingdom by 2024. And that's still a long way off. That's good 4 years off. To get 88% coverage is still probably too little. And then they're looking to achieve 90% coverage by 2026. So when we are working towards this financially inclusive scenario, and fintech can do whatever they can, and a lot of organizations are really pulling out the stops to provide those levels of control, the security, the budgeting tools, etc., that we know fintech is providing. But without that access to the digital environment, our citizens are still excluded fundamentally, and that's got to be something that, as we holistically, hopefully we will have this date in mind of, we are going to go towards cashless within this date. We can all push together for a digital and financially inclusive environment.
Yeah, and I think that survey that you outlined there is really encouraging. The fact that you've got so many fintech operators who recognise that they have both a social and a commercial purpose, and those two go together. It is about sustainability, isn't it? And at the moment, there's a huge missed opportunity for financial services. If you have so many people, I mean, over 1 million people in 2020 without a bank account, well, that's a great opportunity for financial services. Those without insurance, without access to savings. Up to now, conventional financial services have not bothered with that section of the market. It's too expensive, it's too bothersome, it's too difficult. Fintech innovators, the disruptors, are moving into that section of the market, and they can be sustainable if they can find ways of reaching out to those groups. But to do so, they've got to learn from the mistakes of conventional financial services, because most of those services are designed almost as if people still living in the 1950s. You know, they're designed on the basis that people have a permanent lifetime job, which they're unlikely to change. That therefore things like direct debits or standing orders, you know, which are okay if you have a regular income. They work well, they're convenient. But if you're on a 0 hours contract, and if you're not certain where, you know, the next week or the next month's income is coming from, or if it's coming at all, then committing yourself in those ways, you know, can be really quite dangerous. So we've got to design financial services for the way that people live their lives now, and which meet their needs now. And I think fintech and, you know, the innovations that we're seeing are able to do that. And it's really encouraging seeing your survey that shows that the people involved in that area see it as sustainable, because it's no good if it's just a sort of short-term charitable objective. It has got to be sustainable.
Absolutely. And I think one thing in terms of sustainability, obviously one of the large players that actually supported the ecosystem, i.e. the Wirecard, you know, they were really the gold standard of delivering financial services and a service to those providers of the service to the end user that we have enjoyed over numerous years. And obviously there's been a whole challenge over the last sort of couple of weeks with the Wirecard situation, the company going into administration, aspects of the business being divided up and sold, the various assets being sold off, and who knows how that's going to pan out. But what we can see is that there is going to be an impact on fintech and their ability to deliver those and continue to deliver those services, because Wirecard was such an enormous and important cog in the wheel. So, you know, from whether or not this is related to the Chancellor's review that's been kicked off of UK fintech to effectively ensure the growth and competitiveness of the ecosystem, who knows if that was the catalyst. But you know, from the Chancellor's review, what do you think they're trying to get out of this, and where do you see the opportunity?
Well, I'm a member of the FinTech Delivery Panel, so I'm pleased that we both got the announcement of the review and also extra resources for Delivery Panel to make sure that we can try to support the FinTech sector and to make it internationally competitive as well as domestically. I do think, though, that the purpose of the review is very clearly, and I don't know whether it was related directly to the Wirecard thing either, but it is intended to ensure that you do build a sustainable and competitive fintech sector, and that is very valuable. But I think also the ambitions of that review should be to say, look, there's huge opportunities here in terms of increasing not only sustainability commercially, but diversity, inclusion, greater equality in the delivery of services, challenging that poverty premium I was speaking about a few moments ago. And the review, if it is a far-reaching review, and if it can bring in all of the stakeholders, not just in financial services and in the technology field, but, you know, civil society, the charities, the not-for-profit organisations, if government is fully engaged and up to speed with what we need to do to support this sector, then perhaps the review could achieve something.
Absolutely. I mean, I'm extremely positive about the review. I think there's, again, a real opportunity for that engagement to occur. I think it's absolutely critical that there is a deep understanding, not only by government and the policymakers and the regulators, but also of the fintech community in terms of what is government looking for them to achieve. And if we have some clear kind of guidelines around, look, we are looking, let's get it out there. We are going to look at a cashless society. We're looking for 100% coverage of our telco and broadband availability within the United Kingdom. This is that we know there's challenges there. This is how multiple industries and communities can pull together to ensure that actually we don't leave people behind within that process. And it is clearly announced, and we have a real roadmap that we can all work towards. with clear milestones of to what is the government expecting us as a community, as fintech, as innovators, as people who actually care about people. You know, that's I think the distinction between fintech and banking is about banking is about locking your money away and having a safe environment. And the UK banking community have done a phenomenal job. You know, it's one of the most secure, robust networks in the world. It's been the envy of the world with our faster payments network that we've kind of exported out, and the direct debits that you mentioned previously. You know, it's really been the envy of the world. Challenge is, it was all about just money movement. It wasn't about supporting people's lifestyles and understanding that each user has a different requirement dependent on their particular need. And I think that's where fintech is slightly different. It's very much from not so much about the money approach or the transaction. The transaction is just the thing that you have to do in order to support the end user. So the fintechs really look at the end user use case, from a user experience perspective. And this is why, you know, the likes of, you know, some of our customers at GPS, you know, the likes of, you know, Starling Bank, I forget the number of awards that they've won for their UX and their app design, because it's just phenomenal. They've won every award out there. The same with Revolut, and another one of our customers, Curve, you know, Stocard. These guys are really, you know, driving not only better access to financial services and understanding and controls, but also giving the customer that choice in how they live their life and giving them that visibility. That's absolutely key to their propositions. So in terms of
on that point, I mean,
sure.
I think if we could build a real partnership between conventional financial services and those firms that you've just been talking about, and that sort of partnership is developing now, but there's been a real need to clear some of the barriers to working together. You know, conventional financial institutions, as that description of them implies, are not always as light on their feet as they might be. There is also this tension between competitiveness and partnership working. And I think we're now seeing a shift towards the latter, to a real recognition that some of the innovation that the fintechs are bringing to the market can be of value to the established operators. And if we can do that, then we really have got sustainability. We've got scale, we've got reach, and we've got innovation. Putting all those together is a real winning combination, it seems to me.
Absolutely. And that hopefully the review will sort of draw some of these things out and encourage that collaboration and participation. I know that things there have been numerous examples of proof of concepts, etc. A lot of the banks themselves looking to launch their own digital proposition instead of trying to do something within their own construct with their own sort of legacy platforms and systems. You know, they've got, like as Chris Skinner said a couple of years ago, you know, the banks are too big to fail. And with that notion that you know, the psychology behind that is such that, you know, who wants to be the one to make the decision to do something differently, because they have been extraordinarily successful. They have secured our money. They've done a fantastic job for this country and, you know, for the world, really. We have been the envy, one of the financial centers of this planet. And, you know, so there is a lot at risk. So you can understand the banks and the speed at which they can operate. Things have moved further forward, and I think from a COVID environment, I think what those existing players are seeing is that, crikey, actually, we do need to move. Bricks and mortar just doesn't buy it anymore. People aren't going to come into stores. We do need to improve our digital access for our customers. I mean, 6 million people within COVID, 6 million people for the first time downloaded their bank's app for the very first time. So all the signs are there that consumers are ready. They are now in a position where not given much of a choice, where they have a choice, they're able to access and they will use it. And actually the feedback from those consumers has been pretty positive. Actually, crikey, I can do all these things. I can make a payment. I can do everything. I don't have to go into the bank. I don't have to spend my time. I can use my energies elsewhere. So, you know, it is about that supporting of lifestyle. So we're on this journey, but I do believe, I agree with you entirely. I think that collaboration approach of, you know, what fintech has learned, rather than kind of the banks just doing a me too. Well, we can do that, and we'll try it at their own speed. Let's actually form a real collaboration approach here, and hopefully the review by the Chancellor and the team of experts that have been assembled will actually draw that out and put out a plan with some defined milestones in terms of what government expects. That would be the ideal use case, right?
I'm optimistic.
So one of the other areas that we haven't touched on yet, because we've been talking largely around sort of the transactional banking side, but one huge part of the traditional players that they play in this role is actually with regards to credit and offering a credit line when needed to individuals and actually business. So from a challenge perspective, there is a difference though between kind of just having access to credit, so payday lenders, etc., and there are providers out there, but is it fair? Is it real? They have access, but is it on fair terms? So the term of affordable credit is really one that I wanted to touch upon in this session. You know, what are your feelings around affordable credit? How it's engineered? How can we actually make that a reality?
Well, I think, Neil, affordable credit is, and access to it is the key to really helping people move out of this pandemic. And we've got to recognise the scale of the challenge. You know, 35 billion of debt, much of which is being carried by SMEs and by households, which will not be repaid. There's no, you know, so much of the support has been on the basis of credit and not grants, that we've got to accept that in the longer term there is going to be a huge overhang of debt. And the other side of that is because people have not had access to affordable credit in the run up to the crisis and during the crisis. So if we can find ways of making access to that affordable credit available, recognizing that as soon as the crisis hit, many of those sources of credit for the more vulnerable and the more likely to be excluded started to withdraw, we will be giving a much firmer foundation for the future. So, for instance, we've got things like Fair for All Finance, which has been established, which is using, you know, the orphan funds, as they've been described, to lend money at an affordable rate. We've got a lot happening in the fintech world in terms of lending on affordable credit and in the community lending sector. But we do need, again, the major financial institutions to step forward and make their funds available, you know, to those who are on the margins, which up to now they've been reluctant to do. Now, a key to this, of course, is the gateway to credit, which is the credit scoring process, the assessment of risk and the assessment of affordability. And I've been really interested to hear from some of the fintech providers about ways in which they're trying to develop an objective across the board affordability measure for each individual. So credit risk, which the CRAs obviously focus very much on, is this person likely to repay the loan? Can they afford it? And, you know, are they sufficient risk? Even if they could afford it, are they going to repay it? The affordability question is separate from that. It is about giving lenders the opportunity to judge whether an individual has got affordability for a certain amount of credit. And if we have got an objective measure, that puts power back in the hands of the consumers to go to various lenders to say, look, here's proof I can repay a loan of this particular level. Now, what's the best deal you're going to give me? And it might be from a car company, it might be from a bank, it might be from an alternative lender. but by putting the power back in the hands of the consumer, then, and by reducing the risk thereby, you are going to get some of the rates of interest that we've seen being reduced. They probably still are not going to come down to the sort of level that we've got with, with mortgages and other forms of secured credit at the moment for mainstream borrowers, but they're going to be much less than the sort of rates that some people on the margins have had to pay up to now.
Brilliant. Yeah, I totally agree. And I think initiatives such as open banking, which is giving, the fintech and the banking community better access to the entire estate of individuals' payments and, their affordability for a particular service is going to really change this landscape. And we're already seeing certain aggregators of that data kind of coming out with these great, you kind of compare the market style solutions and propositions. Which is really going to be the next driver for affordable credit. And again, as you say, putting the control back into the hands of the consumer, which is what it's all about. And more importantly, they know what they're getting themselves into. If they are paying for a higher rate, but they know why, and perhaps there are other linked benefits to do that. Obviously, providers are now extending their reach. It's not just about lending; it's also about insurance. It is about the banking services that some of these providers are providing to their own users. So we are kind of seeing lenders coming into the fintech space, fintech coming into the credit space. So there's again this collaboration approach that we've been talking about, absolutely key, and hopefully will be covered off in the review. So Chris, that's been fantastic. I think we have actually we have a number of questions as well that we wanted to kind of touch upon. That we've received prior from a bunch of supporters within the industry. I think we'll kick off with the first question. So, what's the greatest challenge for fintech? That's a big question, big open question. Could be a one-liner back. Could be we could be here for 3 days. What do you think the biggest challenge for fintech is, Chris?
It's scalability, isn't it? Really, Neil. It's how we've got some great ideas out there. It's how we move to a position of sustainability and scalability. And I believe that that's very closely related to that social purpose of reaching out to the financially excluded. Big market there, which at the moment isn't being served and which is therefore being lost to the financial services sector. So I think a big challenge for fintech is to reach into that market, provide both the social purpose and the commercial purpose of addressing exclusion.
Yeah, I think on my side, I think in the short term, again, just linking back to the Wirecard scenario, I think people are spooked. I think the industry is spooked at what's happened, and I think what that's going to mean, at least for the short term, is that there is going to be more review. Just like the Chancellor has kicked off the review of fintech, the regulators are going to become more involved. But what that all means, it's all for the positive outcome for the future. But right now, probably for the next 12 to 18 months, what we're going to see is more due diligence, more focus on internal processes and procedures, not so much focused on externally facing sort of proposition development and innovation. So that's one of my key concerns for the fintech industry, is how can we, whilst we remain compliant and not just in line with regulation, but ahead of the regulations, making sure that our consumers' funds are safe and secure and we're doing the right things, but also that there is continuing innovation, especially when we've got the rollout of the new initiatives like the open banking, which has such potential to transform the use cases and how customers and consumers can actually control and use their money and the data around their own financial position for their own betterment. I mean, that's really one of the greatest challenges. In terms of greatest opportunities, what do you think the greatest opportunity is for fintech?
Well, I think it is, again, reaching out to that market, which is not used at the moment, but also the international competitiveness. I mean, we are ahead of the field at the moment. We need, all the more important with the pandemic, but also we mustn't mention the B word, must we? But something is going to happen at 31st of December this year, which will mean that we've got to reach out to other markets. And in terms of the role of regulation, I think you're absolutely right that there is a risk there that the scrutiny, the regulation will become tougher. Up to now, I think the FCA has taken a light touch approach with things like the sandbox. It's been trying to encourage and nurture innovation, and I hope that will continue. And I hope the pandemic and what happened with Wildcard won't change that dramatically. But one of the ways in which fintech can take on the new opportunities is to show that, as you said a few moments ago, it's moving beyond statutory regulation, that it is about voluntary self-regulation. One of my other roles is I chair a thing called the Lending Standards Board, which sets voluntary standards for card companies and for banks in their lending to small business and to households. And those standards have been recognised in terms of business lending by the FCA, who have said, look, if the sector can do this itself, and if it can do it better than we can through statutory regulation, we're happy to support that, and therefore not to feel that the statutory regulator has to become even tougher, even more intrusive than it has been in the past. So I think one of the opportunities is for the sector to get together and decide what measures it is going to put in place to make sure that it is clearly operating fairly in relation to consumers and helping consumers take advantages of things like open banking.
Absolutely. And just to build on that, I think from my perspective, what I can see is that we have a community already with the best interest of giving control back to the consumer. And that's really what fintech is all about. It's about user experience and giving those users the best possible experience within the governance in a secure and correct environment. But I think that with these new initiatives, so say, from a affordable credit perspective, from an open banking perspective, from an internationalization perspective, I do believe that hyper-personalization of the accounting experience is absolutely key. So, blending all of those aspects together, giving one individual a entirely tailored financial experience based upon their own use case, their own lifestyle, whether they're on a 0-hour contract or they're full-time employed, or they're a contractor or self-employed, regardless, or unemployed, regardless of their financial standing, their position, their employment, that actually our financial services actually speak to their particular use case. And that hyper-personalization, I do believe, is the future. That's the biggest opportunity. Whoever can knit all of those components together, and maybe it's not one individual organization, perhaps it is a consortium of organizations, such as a traditional player coming in and with the weight and the diligence and the understanding, the heritage that they have, knitted with fintech innovation and the UX aspects. Perhaps that's the future, but who knows? We'll see next year, Chris. Let's do this again next year, and we'll do a review. Well, Chris, that was a brilliant review, and it's, as ever, it's always enlightening and brilliant to speak to you. I think unfortunately we're out of time, and we've run out of question time as well. So all I can say is to the audience is, if you have any questions, please feel free to reach out to Chris or myself through LinkedIn. We also have the GPS stand, so I'll be attending the conference at the GPS stand, so come find me there, and again I can put you in contact with Chris if needed. And until then, thanks very much for listening and watching, and go and enjoy your lunch, and we'll see you next time. Thanks very much.
Thanks, Neil.
Cheers, Chris.